Hello, in this short video, we are going to see what is the buy now, pay later product. Before we see the details of buy now, pay later product, let's see some of the key terms which are important to understand the product. So the first thing is account receivable. This is basically the money which is owed to a business by its customers or clients. So let's see it with the example. There is a supply, it supplies some goods, the buyer is purchasing or taking these goods. It is not always the case that the money is immediately paid to the supplier. Sometimes the money is paid after a period of time, and that money which is not yet paid is basically the accounts receivable for the supplier. This supplier is going to receive this money, that's why it is called accounts receivable. And for the buyer, it has to pay this money, so it will be accounts payable. And please note that this is basically asset for the supplier. Supplier will be receiving this money, so in his balance sheet accounts receivable is a asset. Vis-a-vis for the buyer, it is a liability because it has to pay this money. It owes this money and it has to pay this money, so for buyer it is a liability. So that's what is accounts receivable. Let's see the other thing, the conversion rate. So what is a conversion rate? So let's say I have a e-commerce site. I may have millions of people visiting my site, but not all of them will be purchasing, or not all of them will be converting to customers. They may be seeing the products and just adding some products on the cart, but not never buying that. So conversion is basically how many percentage of people who visited the site did actually purchase the product. The next important thing is AOV, average order value. So this means that let's say with the help of one example, I'll try to explain. Let's say the website which I owned was able to sell 50,000 USD worth of products. Okay. Now let's say that there were 1,000 orders which were sold. So if I divide this 50,000 by 1,000, it comes to 50. So 50 is the average order value, which means if I say per customer how much they were purchasing around $50 worth of products. So AOV is 50. So loyalty is basically the return value. So basically, if a person comes to my site, whether they will come and again visit me for again continued purchases. So if they like my product, like my services, they will be visiting and be loyal to the product and be loyal to the site, the e-commerce site. The last thing which is important, and this is basically a long time, this specific financial terminology or financial phenomena is going on, which is called accounts receivable factoring. And this is, when we say buy now pay later, it is a type of account receivable factoring. Okay, so let's see what is account receivable factoring. So let's say that this is a merchant, I'll put M. This is a finance institute, a financial company. It may be a bank, any financial non-banking finance company. So I'm saying financial entity. This is a financial entity. Okay. So now let's say that this customer has purchased a good of $100 from this merchant. Okay. Now what happens is, let's say this customer does not have the money to pay immediately this $100. So what happens is that this it has to receive this money. Okay, but what it does is it sells this account receivable to something called as a factor. Okay, and here it is a financial entity, so it will sell this to a factor on a discounted price. Let's say it sells it on a $97. Okay, and immediately this financial entity is going to pay the $97 to this merchant. So merchant was able to sell his goods. Okay, we you may be noticing that the merchant had a loss of $3 here, but we will come to it whether it was a $3 loss, or did he gain, the merchant gain something out of making this $3 loss on the invoice. So to again see this, there was a purchase which was done for $100. The merchant, the customer was not able to pay the money immediately, what happened is the receivable, the account receivable, which is $100, was sold to a financial entity by this merchant for $97, and immediately the financial entity transferred the $97. Now this financial entity will be directly interacting or servicing the client, and the servicing the client means this client has to pay that 97 they pay that, sorry, $100 to the financial entity. So financial entity and this customer has an agreement, thereby they will be the customer will be giving the money on a agreed terms and agreed time frame to the financial entity. So this is basically account receivable factoring, and it used to happen a lot in the past also. And this one, when we say buy now pay later, it is uh, basically a type of account receivable factory, wherein this is primarily done for the commercial sites. So for example, website, e-commerce or retail commerce. So there is where this kind of account receivable factoring is done, and this is called buy now pay later. Okay, so how you can see that the customer has bought the items whatever he or she wanted for $100 immediately, but it is not paying the money immediately. It is paying to the financial entity. It is kind of a loan, and it is sold as a zero interest, zero APR loan. Okay, so if the customer is making the payment of $25 for a 4 week, four fortnights or whatever agreed term, it is basically coming to $100 only to the customer. Okay, so customer buys a time with the help of this BNPL, and the merchant is able to get the money immediately with the BNPL, and the financial entity also makes some profit here. So let's see what are the different profits which are for this entity and this entity. I'm sure that profit made for the customer is immediately clear. He or she is able to get the items they wanted immediately and without paying any APR, without paying any interest to it. Okay, now what are the benefits for the merchant and what are the benefits for the financial entity? So for the merchant, we see that the conversion rate, the people who are coming to me to visiting my website or visiting my retail store, they are able to purchase the things because even though they don't have money, they are getting financed and they are able to pay they are able to make the purchase with the loaned money immediately. So conversion rate increases. Average order value also increases with the help of this. Okay, and loyalty of the customer sees the service, they feel that it is very helpful for them, they are able to manage their finances in a better way, and they will be loyal, and thereby the merchant will be able to get repeat business. So that's how the merchant benefits. Now let's see how the finance company, the financial entity is able to generate money out of it. So, like I showed earlier, for $100 worth of product, when you make a purchase from a merchant, you pay for either with a cash or a debit card or a credit card, and there may be some other things also. So primarily these were the three things by which you pay. So as you know, 3%, 2 to 3% is already discounted, or the merchant receive 2 to 3% less if in case they are if in case the customer uses a credit card. Okay, and for cash and debit also, it may seem that it is like a free uh, transaction for the merchant. They get 100, if somebody pays 100, the merchant gets 100. But there may be some counterfeit notes, there may be some delays, there may be some other issues which may come. So cash and debit also may incur some cost for the merchant to receive the money. It may not be 2 to 3%, but it may still be some percent. So, so if it is 2 to 3%, they are already paying for the credit, which means that $9,700 worth of product they are already selling for 97. So, and here there is a delay. They don't receive the money immediately. But BNPL, they are receiving the money immediately. So it is not a loss proposition for the merchant. Okay, they are receiving their 97, which they are able to rotate their cash flow and able to generate more revenues and generate more profits. So for them, it's okay. For this company, the company which is making money, they receive $100. Even though they paid to the merchant 97, they still receive $100, which means immediately they have a $3 worth of profit. So let's say if the term was that the customer will be paying the $100 in like fortnightly payments, four fortnightly payments of $25 each. So if you calculate the interest, which they are able to get interest on $3 for 56 days, it amounts to around 20% interest, 20% annual interest. The BNPL, sorry, the financial entity is able to make 20% annual interest, which is very, very handsome money. So this is very good money for anybody. 20% is a very, very good money. Now consider the other scenario where the customer is not able to pay the $25 in time. Now what happens is they levy a huge interest rate or huge charges if in case there is a default. So there are two avenues to make money. So this BNPL company or the financial entity is also not making any loss. They are also making a lot of gains. So that's what is the concept of buy now, pay later. Hope it is clear. Thank you very much.